Hey, traders, welcome back. It's been a while since I've done a video. I have been a bad boy. But in my defense, I have been redesigning my website and changing things up a little bit. And that kind of leads me to today's video. So in the next couple of weeks, you're going to see a new website that's coming out where I am going to be offering a signal service. Now, if you haven't watched the video that I did on CLF, we'll just go there right now. CLF. So, wait, that can't be right. This is actually up today, this trade. I don't know what's going on there. Oh well, I guess it's not up yet. I just looked at it a few minutes ago and it was up. Okay, for some reason the daily chart was showing like a big green candle, but as you can see, it's come back down. Now this trade is still working. We have not been stopped out of this one. It's been a couple of days. And I still am very confident that this trade is going to work. I especially like this rejection that we're getting here today. So that trade is still working. I don't know why the daily chart looks so weird. It's actually trading at 842, but it's showing a green candle. In any event, let's not worry about that and move on to today's trade, which is SCX Suncoke Energy. Okay, now we're going to take a short here on this one as well too, and we're going to just structure this trade a little bit right now. So there's going to be a couple of rules for this trade as we go into it. We're going to do a short trade on it, and what we're going to do is we're going to get short here, and our stop is going to be just about there. Okay, now we're going to go for a 2-to-1 ratio on this trade, so that should put us somewhere around here. I think we can get to this level down here, so about 2.26, and depending on how you have it set up, okay, if we're going to go format, this has an account size of $100,000 in it and a risk of 1.5%. So you can see here that you can do 283 shares. Now, that's fine. You can do that. However, we're going to wait for this candle to close today, and then our depending on where the trade closes on the day, we're going to put our entry or stop entry just below. Okay, so we're going to just below that. We have a 53-cent stop, and we're going to use a stop order for tomorrow morning, a sell stop order. So that's going to be that trade there. Now, that being said, I don't necessarily want to short this trade per se. So let's go take a look at some options trades and see if we can structure some options trades. Okay, so we're back. So we have SCX in here. Now, we're going to give it 15 days. I think that I'd prefer a 30-day trade, and I don't want to go out 50 days. So I think what we're going to do, because we're giving it 15 days, I think we're going to structure a sell, we're going to sell some premium on this, okay? Or we're going to do something a little bit more creative. So let's take a look here. Now, we obviously want to be short this, and the stock is trading at 1350 right now, and we have the 1250 puts. They're trading 5 cents to 15 cents. That in itself is not that bad. I actually kind of like that, to be honest with you. So I'm going to give you a trade here. If you can pick up these 1250s, Just look at the chart here for a second. If you can pick up the 1250s, see, my target is somewhere around this level at 1216. So even if the 1250s get to my full target at 1216, you know, there's only going to be 32 cents worth of premium in that, worth of intrinsic value. So if you can get these for 10 cents, that's not a bad trade, right? That is not a bad trade if you can pick these up for 10 cents. So I would not hesitate to do that, because if you pick them up for 10 and there's 36 cents at or around expiry, that's almost, you know, triple your money, right? So that's not a bad trade. Let's look at that trade right there as being a possibility. However, I think we want to do something a bit more creative, and I think probably what we're going to do in this case is we are going to I just pulled up a vertical on this right here, so we're gonna thinking about buying a vertical. So what we would do is we would buy the $15 put, okay, and we would sell the 1250 put. Okay, so thereby reducing our costs down to $1.45, right? Now, let's go back to trading this. Now you can see here, this would mean that as long as we're below 1352 by expiry in 15 days, we're going to make money on this trade. And we could potentially make $1,000 on this trade. Okay, 1,050, which would be nice. Okay, now if we go to basically our break even, you're looking at 1352. So let's just pop that up here. So right where we are right now, which is really sweet. Okay, so I very much like this trade. It's about an hour, 45 minutes to the close. As long as we close, you know, dark red here or in the red, somewhere around this level, I really like this trade for tomorrow. Okay, so that is another option. Let me just pause the video here and show you guys one more option. I pulled up another trade here. I pulled up an unbalanced butterfly or a broken wing butterfly, and you know, it's not really that much better than the credit spread. You can see that we move our break-even point up to 1260 or 1363. But one of the reasons I was looking at this trade was because I have a very specific target in 15 days. And my target is that 1250 area. And that's where my analysis suggests we should close, or this trade will go to. Now, you know, if you take a look at this, you see the blue line is assuming we're at expiry. The purple line is basically without being at expiry. So if we were to get to the purple line in, you know, let's say 5 days, 6 days, it would only be worth 1,068, right? Not not the full 2,000. So if we were to get there tomorrow, I believe that is exactly what it's measuring. So, the unbalanced butterfly looks okay. Now let's just compare that. Okay, let's just compare that with just buying the put. Okay, so you can see the same scenario. 1352 would be our break even if we buy the $15 put. Okay, but our upside becomes, you know, obviously a lot greater, right? And our target's going to be around 1250. So you can see about $900. So I guess looking at all of these, I think that, you know, the difference is, as you can see, our risk, right? If it were to rally strongly, we'd lose $1,500 on that, right? And I guess the difference is going to come with our risk. So let's just go take another quick peek at the vertical, because I think the vertical is going to give us the best bang for our buck. I don't even think that the broken wing butterfly is going to do it. Let's take a look at that. Okay, so going back to the vertical, yeah, you see we really don't gain any advantage by the vertical other than capping our loss at $1,400, but we also cap our profit at $800. So just not liking this. Let me just investigate one more thing here. I just wanted to take a look at doing a vertical credit. So actually selling the calls and seeing what that looked like, and I'm not liking that very much either. It's pretty much the same risk profile, and we need the stock to move to 1250 to realize our full profit on that. And we're not picking up anything as far as removing any risk. You can see it's still a $1,400 loss here. So let me look at one more thing here. So I just pulled up a back ratio, and a back ratio is basically we're selling 20 of the 1250 puts, and we are buying 10 of the 15 puts. So we're looking at a $1.30 debit there. Now again, you see how I'm trying to build a trade based around my target, which is the 1250 area. Now the thing with this trade, that is my target, meaning that, but I don't know how fast it's going to get there. I know that we're probably going to test that area. I'm just not sure how quickly we're going to test that area. So if we get there too quickly, sorry guys, if we get there too quickly, I'm only going to make $388 on this trade, but I still have $1,300, $1,500 worth of risk, right? So in this scenario, I don't see a big advantage. I don't reduce my risk. Where's my break even? I move my break even to 1369. I really don't see any big advantage to doing an options trade here at all, other than capping my max loss, right? So for example, if we are to just short the stock, right, there's always the risk that, tomorrow Suncoke could be bought out and this could open up at 30, right? I mean, that does happen, right? So there's always that risk if I just short the stock. If I short the stock, it can get there in a week, it can get there in 2 days, it can get there in 3 days, it can get there in a month, and I'm not really worried about it too much, but I always do have unlimited risk whenever we're shorting a stock, and you always have to keep that in mind. So you should always ask yourself, is it, whenever you can trade an option, is the option going to be better? And I think right in this particular case, I think just buying the $15 option, the $15 put, let's go back to that, so let's get rid of that here. Just going back to that, just buying this put at $1.50 if I can get it. The advantage is that obviously I cap my max loss. The disadvantage is I've only got 15 days to get there. Okay, so I don't like that. I don't like any of those. After reviewing it, and by the way, guys, I'm just doing this live with you because this is what I do when I look at a trade, right? I go through and I take a look at what are all my options. What exactly can I? How can I structure this trade in a way that I think is going to be beneficial for me? Let me check one more thing. Just wanted to pull up a regular butterfly, not a broken wing, and you can see even in a regular butterfly really there's I mean I have to land right on 1250 in 15 days, and again my break even is 1360. So yeah, I really don't like too much of anything here. I think that the best trade is still the broken wing, and I think that's it. I think that's going to control risk. It's also going to give me the max reward. So I really think the broken wing is probably, remember, when we do the broken wing, we're going to be paying a lot more commission though, right? So we got to factor that in. Mm, yeah. Sorry, but this is what I go through, guys. I'm doing this live with you right now. It's 3:30, and I want you to see my thought process as I'm analyzing the best way to exploit any situation. And quite honestly, I don't think that there's not a lot of M&A going on right now in oil and gas or energy companies. Although they are kind of hot right now, there are really not a lot of mergers and acquisitions going on. I think I'm just going to short the stock because I don't like any of the premium selling that I see here. It just does not look favorable, and that's really what I wanted to do, right? I wanted to structure a premium selling trade, and sell some premium and see if I could let that 15-day. I only got 15 days, so I was hoping that that time decay worked for me. And one second, I just take one more look here at this broken wing. I definitely don't want to do like I definitely don't want to do. I don't really see that being a great trade. I mean, it's okay. I mean, I cap my risk at 2,800, and I could make 2,000. I can reduce this down too, right? I can bring this down to, um, could bring this down to 10 and 5. Look at that. That looks a little bit better, doesn't it? Look at that. That looks really kind of better. So my max risk is 1,060. Look at this. I like this, guys. Okay, guys. Now this is what we're talking about, and that's why I'm kind of doing this with you, because I really want you to experience what I go through when I'm structuring these trades. You can see here that I move my break even to 1349 or 1394. So that's significant. I still will reach max profit at my target, okay, and I move my risk down to $1,000. But now look at my max profit is now 1429. Yeah, I think we found it. So this video went on 20 minutes longer than what I wanted it to, but hopefully you stuck around to the very end because it was worth it. And I am about to send this trade. I'll even do it live with you right now. So there you can see here. Here's my order confirmation. We're looking at a max profit of 1450, a max loss of uh, 1,060. Cost of the trade, including commissions, is 109. So we got to take that off of there. There's my buying power effect, and there you go. Trade is sent. Let's see if we get a fill. We will find out. And that's how you do it, guys. That's how I decide whether or not the best way to exploit my thesis on this trade. Right? Now it's up to you. So right now I'm going to hopefully have that trade working for 15 days. And in 15 days, if we get down to my target, which is going to be around this 1220, 50-ish, 1222 area, all that trade will bring a maximum profit for me, and with limited risk, right? So we'll have to see if I get that fill. If you want to short this trade just by doing the stock, the entry is going to be on a stop just below tomorrow morning, just below where this candle closes. It's only 30 minutes left, and your stop can go just above. Okay? Love this trade. Think it's great. We just got earnings out of the way not too long ago. Not going to be any earnings coming up. So should be a good trade. This is officially trade number 2 that I'm doing for the new managed service. Look for that coming up soon. Hopefully you guys liked it. I apologize the trade took so long, but I think it was worth it. And hopefully if you stuck through to the end, you agree. Thank you. Bye for now.